Welcome back to the 10K SOXL Trader Challenge Day 44. This video is a recap of the October 16, 2025 trading day. No trades were executed on this day, remained on the sidelines. Daily operations and execution, capital base, $10,797.73, latest net asset value after previous period correction. Daily execution, no trades. Entry conditions not triggered, volume and structure not synchronized, intraday pullback risk relatively high. Quantitative summary, number of trades, 0, win rate, no trades. Daily gross P&L, $0, latest account balance, $10,797.73, market overview, market continued the recovery, tug of war, rhythm, early session lifted by technology and AI chain, afternoon dragged down by weakening banking sector, major indices ultimately closed lower. High beta and semiconductor intraday elasticity remained, but volume and futures basis did not show sustained resonance. Choosing to stay in cash and wait for higher probability volume price patterns and rhythm confirmation was reasonable. Index and market recap. U.S. equities overall, range-bound volatility dominated, strong early then weak. Three major indices closed lower, S&P 500 minus 0.6%, Nasdaq minus 0.5%, Dow minus 0.7%, consistent with the description of afternoon momentum slowing. Sentiment amplification effects still present. Semiconductors and growth, intraday overall leaning strong but internal divergence. Late session fell back with broader market. SOXL daily high-low range approximately 6% and closed up at 40.57, up plus 1.5% from previous day, reflecting high intraday elasticity but steep pullbacks, lack of leadership continuity. Interest rates and dollar 10-year Treasury yield declined to approximately 3.99%, slight drop from previous day's 4.05%. Dollar index weakened. Slight movements in interest rates and dollar still had amplification effects on growth valuations and intraday sentiment. Futures and volume, key periods saw basis plus volume, unable to reinforce in the same direction, trend trading not strong, intraday better suited for structural and quick in and out approaches. Today's news, policy and macro rhetoric, U.S.-China trade and export control uncertainties continued to disturb. Dollar weakness and yield decline reflecting marginal changes in risk-off and rate cut expectations. Intraday volatility significantly affected by news flow. Corporate and industry side, TSMC optimistic guidance and AI chain positives lifted early session sentiment, but regional banks exposed credit issues triggering capital withdrawal, sector divergence intensified. Risk appetite, post-deleveraging, cautious recovery, continued. Against backdrop of elevated volatility, capital characterized by both dip testing and high-level profit-taking coexisting, trend continuity limited. Closing thoughts. During the tug of war and rising uncertainty phase, staying in cash is also a position choice. Patiently wait for clearer volume price resonance and structural signals, then concentrate firepower to improve win rate and risk-reward ratio. If this recap is helpful to you, please like, bookmark, and share for support. See you in the next video.